What's going on? Money Morning Live. Wasn't that a nice half hour with Brandon and Nick? I know that I enjoyed it, but right now we're bringing in Tom Gentile with Power Profit Trades. Let's get this going in 5, 4, 3, 2.
Hey everybody, Tom Gentile. Welcome to Power Profit Trades. Oh gosh, you got me for an hour today. We will not be talking about crypto. Crypto's fine. Leave crypto alone for the day. We needed to stay above 35,000 on Bitcoin for a day or two anyway before we can really talk about it. But nice bounce we had yesterday afternoon. For the next hour, however, I'm going to go over, I've got stocks I want to talk about. Let me pull the agenda up. I've got a market check. We're going to look at FANG. We're going to look at Apple. Microsoft is announcing today. We're going to look at the rest of my top earnings names as we head out of January and head into February. I'm also on Momentum Watch. We're going to take a look at the S&P 500 and see what's momentum going up and what's momentum heading down. Plus, guys, if you want to know what's been working in January, not the hit or miss, but if you want to know what's been hitting 100% on all cylinders in January, I've got it. I have trades to show you. I have results, some great results on something that we do that involves volume. So we're going to be talking about volume-based stocks. Of course, for those of you hanging out for Operation Surge Strike, we'll really get into the hot and heavy at 1 o'clock. But let's go ahead and start with a market update. Eric, you ready?
Yeah, man, I'm ready to go. Let's get into this market update. I mean, I'm a little sad, Tom, that we're not going to be doing any crypto stuff today, but I know you do a lot of other things too, and I need to start learning some of this other stuff that you're doing as well. Because honestly, I primarily do things in crypto. But we're ready to listen to your market update.
So check this out, Eric. I'm going to show you this real quick. This is a little teaser here. All right, I want you to keep an eye on this. All right. This is one style of trading that we're doing. We've had 7 trades already for the month of January. They don't pop up all the time. This isn't day trading, but it is volume trading and volatility trading. Take a look at this, 7-0, 100%, and this is on a per contract basis. So we've got some really good numbers. I'm going to get into this a little bit later, but I thought I would set you up for that because a lot of what's going on here that's happening over in this neck of the woods is based on volume, volatility, and tell me if I'm wrong, Eric. We've been having a lot of volume and we've been having tons of volatility here to start off the new year.
You are not wrong, Tom. I would have to agree with that 100%. People are going crazy over it.
We'll get back to that. All right. And check this out. This is the volatility I'm talking about. This is the S&P 500. And you can see over the last, really, if you go back to the beginning of the year, when we were sitting up here at all-time highs, we've gone from a high at the early part of the year at 480 on the SPY. We were down to 420, just above 420 before that big bounce yesterday. Now, it didn't shock me. That bounce came so far, so fast, and nobody had any idea why. There was going to be a little bit of snapback on that, and that's exactly what's happened so far, is that we're getting a little bit of pushback on that. We've seen it with what's happening in the markets themselves. But the one thing that remains constant throughout this year so far is options implied volatility. What I'm talking about, I mentioned it a little bit yesterday, but options implied volatility is really the IV is the time value in what you're paying for your options. So those of you watching, I want you to think about this. Okay, we're going to look at FANG stocks in a minute and get a really good idea of what we're talking about. But if you're paying $3 for a call option, and you're looking at this red line, and this red line is sitting down here last week around a 16, okay? So think of this as a percentage, okay? I'm not going to get into too much detail here because I'm going to go too far sideways, but think of it as a percentage. If something goes from a 16% to a 32%, right, that's the ranges that the perception of where the market's likely to go in the future is now doubled from a 16% to a 32%. What do you think the time value in the options on that underline are going to do? They're going to take you, if you were paying $3 for time value last week or 10 days ago, you're now paying $6 for time value today. So time is getting more expensive, And that's because we're seeing a lot of nervousness happening in the markets when you see these drops. Okay. Think about yesterday for a moment. We have to go back. This is 80 days I have on the chart. Let's take it back 100 days just because. Take it back 100 days, and I want to show you something. You have to go back to the beginning of October to catch the lows that we had just yesterday. When we can go from all-time highs at the beginning of the month to lows that take us back 3 months, that's adding to a lot of nervousness, angst. And when we see angst coming into the market, we say option traders that are saying, I have no idea where the market's going to go day to day, so I'm bidding up my option prices, because you got to realize there are people out there that are making two-sided markets for you and I. They're not going to make it easy for us, right? So we have to understand this market volatility and how to trade it. All right, so that's SPY. Very quickly, TLT, bond market. You know why the bond market's going up lately? Because the stock market's been going down and smart traders are trying to figure out where to put their money. All right, money managers, people that run billions of dollars of assets, are moving out of risky propositions, and that's stocks, commodities, even cryptocurrency, and they're moving money into a safety net. And that safety net is bonds. That's why you're seeing TLT get a little bit of a bounce here. All right, USO. Really, this is one of the safer assets to have been in for the last few months. In fact, if you go back to July when we had, or excuse me, you go back to December when we had that pullback in USO. USO went from $47 all the way up to $62, currently trading above $60 per share. You know, this one's really perplexed me, and I'll tell you why. Eric, I run, you know, I'm a pattern trader, all right?
Yes.
And I run patterns on everything. And patterns, just like anything else, fundamental, technical, seasonal, nothing's 100%, right? But if I see the same thing happening over and over again, that's the direction I'm going to lean into. Well, for the last 15 years, the majority of those years, oil typically goes up between February and July and typically flattens out and goes down between July and February. Well, that hasn't been the case this year, because between July and February, oil has pretty much gone up. So I'm asking myself, is this pattern going to reverse itself? I'm not sure. We might be in the beginning of a much, much larger move for oil. All right. And I'm talking between cutting off the supply. All right. We've cut supply off here in the US, and add on the prospect of, let's just call it unsettlement. Okay. Some unsettling things that are happening in Russia, in Ukraine, in the Middle East. This could be the case for $100 a barrel oil or even higher. And so we're heading into a seasonality pattern right now, bullish. It's going to happen anytime now. And is that just going to continue to further push the price of oil? It may. Gold. Hey, look at gold. We've been talking about GLD now for some time, and the fact that we needed to get above and close above 171 because we had resistance over here back in September. We had a gap up and a gap down that built some resistance right over here in November, and we had resistance as early as really the beginning of January. Well, we broke above that, and we also tested that resistance as support a couple days ago. Well, gold's been breaking out again. Next stop for gold in GLD, most importantly, 175 is our next stop for GLD. If we get above 175, we're going back to the old highs. And those old highs were 190. You got to go back a couple of years before you can find those old highs in GLD. And that was around the $190 area. I think 189 was that all-time high in GLD. Hey, it's coming. And you know what? Nobody's talking about this yet. This is great. I mentioned quite a while ago that I liked gold, that I'm in gold. The biggest asset in my stock portfolio is not stocks. It's GLD. It's GLD. And if you look at what I'm holding, you want to know what I'm holding? If I've got cards here, and I'm going to turn my cards and show them to you, my cards right now are GLD and some dogs of the Dow. That's my long-term hold. Everything else I'm in as a trader. Okay. So when I look at GLD, and I got to say to myself, well, when do I cycle out of GLD? When everybody else is talking about it. Right now, No one's talking about it. Still quiet. I think we got to get above 175 before we start hearing about more and more about gold, silver, and precious metals. And I'm waiting to hear about them right over there on my big screen. But right now, not being talked about. Let's move on. Okay, Fang Watch. So we're going to go through, I'm going to go through the majority of the Fang stocks. And the reason why is because we have had earnings on at least Netflix. And so I want to talk about what I see coming up as far as the rest of them. So let's start with Meta platforms. Okay, Meta has some big resistance here at 350. You can see that both in November and December. We broke below support, but we're trying to, this is kind of a stab that happened yesterday. We stabbed down to 290, and we're trying to hold some ground here. Look what's going on. Option traders have doubled the price of the Facebook / Meta options here. A lot of that happened, most of that happened here just in the last week. Now, two reasons. Number one, Meta's dropped. Meta's dropped into new lows that we haven't seen for quite some time. And number two, earnings coming out on the afternoon of 2/2, February 2nd. That's in 8 days. What's happening with Facebook? Facebook is, I think it's one of the value plays here in terms of where we see this going. However, they can't just change their name and their business model from Facebook to Meta and immediately get some sort of kumbaya moment with investors. This one's still kind of an unknown. We'll have to see where we end up going, and I'm very curious to see where their earnings are going to come in at. A lot of option traders are too, now that they've doubled time premium. Next, Apple. Okay, so here's the one that we're going to be paying attention to for Thursday afternoon. Thursday afternoon, January 27th, Apple will be reporting earnings. Apple really is and has now become the strong piece of Fang. What Apple does, Apple could be the one stock in Fang that could either lift Fang or fall along with the rest of them. It has pulled back. 183 was its high at the beginning of the year, trading now down around the 158 area. Look at that spike in implied volatility. And again, if you look back at the last quarter, okay, so as we were coming into October, look at the spike in October. It was barely even there. In fact, earnings came out and we'd already started to drop. And then we had a smaller drop after that. So we went from a 22 to about a 30 back to a 22. That's typically what happens in earnings. But as you see, markets had gone up, double topped. Vol came up a little bit, but volume or volatility really cranked after the beginning of the year when Apple was dropping along with the rest of the stock market. So this is some new highs in volatility and in option premium that we have not seen for a long, long time. Okay, Amazon. Okay, you want to talk about a stock that really cratered? Here it is. Amazon came out of this is 100-day chart. 3,200 was the low that we saw back really at the beginning of October. We crossed through that low in January, almost mid-January. And then again in the last week, we've dropped down to as low as 2,700 before trying to grab a little bit of a rebound here, but really not, it didn't really last long. 25 was the IV a couple of weeks ago. Now we're trading at 60. This stuff's getting expensive, right? And where does Amazon head from here? Fundamentally, they're concerned about supply chains and how that's going to hit their earnings. Last earnings, they disappointed. And as you can see here, we opened at, we were closed at around 34.50. And then the next morning we opened at 3,300. So it was $150 down, quick move down, but rebound afterwards. This we might consider a give back. What I mean by that is that the investing public said, okay, Amazon, so you dropped 20% from quarter to quarter. We'll let you have that one. That's a little mistake. Don't do it again. And that's what we're looking at right now. And that's why you're seeing implied volatility had a little bit of a bump last earnings. Big bump here coming into this week's earnings or next week's earnings. But again, a lot of this is because we dropped out of this 3,200 area of support. Earnings are in 9 days. February 3rd, we'll be looking at these again next week. Netflix, I'm going to throw that one behind us. But if you want to look at momentum on Netflix right now, the momentum is down. All right. This does not look like a buying opportunity to me. I mean, unless your time frame is going to be in years. If your time frame's in years, then Netflix is your man. But if your time frame is 30 days from now, I want you to take really careful look at what's gone on here. This was the day the earnings came out. See the high and the low, the range that you see here? All right. Big volume that happened at that time frame. Let's go look at some volume on, there you go. There's your volume. Here's your average volume, 5 million shares a day. Here's the volume in the last 3 days. Earnings day, 55 million, 10 times the average volume. That's how bad it was for Netflix. But more importantly, the last 2 days have been above 25 million a day because people are not convinced that Amazon's done yet. Excuse me, Netflix is done yet. Now, if you take a look at what happened yesterday, we went through the low, and today we're starting to move down again. I see us coming back down here and maybe taking another stab at the low, around that, maybe that 350 area, which is where we were yesterday. 350, we take that out, and now we're talking about the low 300s. I like Amazon Netflix. I said it again. I won't say it a third time. I like Netflix to the downside for the short term. There's a reason why, and I'm going to be talking about it here in just a few minutes. So that's Netflix. Rounding out the last two, Eric, we're looking at Google, which was the absolute best trending stock in FANG until last month. And what I mean by that is that if you take a look at what happened after the Christmas holidays, we had a big breakdown at the beginning of January. Never really could recover. The last week and a half, we've gone from 2850 on Google down to 2,500. When's the last time we saw 2,500? Well, it was more than 4 months ago. We've got to go back several months to see the wipeout that's happened. We've had months of gains now in FANG, in a lot of the FANG stocks that were wiped out in a series of just a couple of weeks. So the bull takes the stairs, the bear takes the elevator. Last but not least, really not part of FANG, but I'm putting it on here anyway, is Tesla. Tesla was in the 700s back in coming out of Labor Day weekend. We had that big push up to 1,250. And from there, we had a kind of a double top at 1,200. But look at what's happened. This is January, guys, 1,200. This was yesterday, 850. And today, 917. I mean, we did come down before. So it's not like Tesla hasn't seen these lows before. They actually happened before the holidays. We spiked up, though, spiked back down again. The big difference between then and now, implied volatility, Eric. We're talking about 60, a 60 coming off this bottom here before Christmas. Well, we're at the same bottom, but now we're hitting 107 on the IV. Again, what does that mean? That means that these options are getting close to being worth twice as much now as they were when we were down in this low the same time a month ago. So that's our market update, guys. Big focus this week is on the Fed. Obviously, we got earnings coming up. I'm going to share with you two of my top earnings picks before the bottom of the hour, right? Tonight, though, it's all about Microsoft. We do have Apple on Thursday. You've seen me talk about the major FANG area and where we're seeing what we're seeing happening with FANG. If I were to sum up FANG before we move on, Apple, probably the strongest. We know Netflix is the weakest right now, but what falls out of that? Based on what we saw happening in the last earnings, I would have to be probably more nervous about Amazon than any other name in the FANG group.
No, you mentioned the top earnings, Tom. I mean, that's what's coming up next. So why don't we dive into that right now and see what you have as your top earnings?
Yeah, so we can do this a couple of different ways. And so what I thought I would do is I've got something in my tools that I call my earnings effects ranker. Now, earnings effect ranker will allow me to, and you know what I'm going to do is I'm actually going to pull up a new chart, a new group. So I'm going to show everybody where we get this information. I'll just pull it out of thin air. So what I can do is within my stock rankers and my analysis, I've got something called earnings effects. So earnings effects allow me to do a number of different things. But even before that, one of the things I can do is just go in and look at what we call earnings rankings. And earnings rankings will allow me to look very quickly at a couple of things. I can look at most actual earnings above estimated earnings. So this is kind of a fundamental way of looking at earnings, Eric. So I can look at what's happened above, what's happened below, and of course I can look at calendar days to next and calendar days to past. So, really quickly, what's coming up? And again, what's coming up on what list? I can look at any list I want to. We'll look at the S&P 500 because that's the list that everybody looks at. But if you take a look here, you can see what's popping up here. We've got GE, we've got Verizon coming up, Johnson and Johnson, Texas Instruments is popping up in here too. There's Microsoft. These are all, see the goose eggs over here? These are all reporting today. All right, so you come into tomorrow, and I see Whirlpool on the list. I see Boeing on the list. Las Vegas Sands is coming up, Lam Research, and then it just continues on and on. This week is really what I'd like to call one of the 2 weeks where we call the sweet spot in earnings. And what I mean by the sweet spot is we're going to get a big, big chunk of S&P 500 earnings coming out this week. So, I heard some of the folks on the big screen, I'm talking about mainstream media, talking about, it's, all of this this excitement around the markets dropping up and down has to do with what's going on in the Middle East, what's going on in Russia, but to me, I think that's going to slowly get cast aside, unless something crazy happens. I think it's going to slowly get cast aside. And I also think that really where the market wants to take over is earnings. I think it's going to be about Microsoft today and a lot of these other picks. It's going to be about Apple on Thursday. And really what happens, I believe, today and Thursday afternoon is going to push the overall markets. But this is one way to look at this. The ways I like to look at these as show me the stocks in the S&P 500 where they have the most actual earnings that are above their estimates. Now, what we do here is we do a look at earnings. And in this case, if you look here, let's look at John Deere for a moment. All right. So John Deere, and I could see what it does in implied volatility. I can look at the last number of earnings we've researched. Well, do you know, Eric, that of the last 8 earnings on John Deere, they have been at or above their estimates 8 months in a row. That's important to me. Yeah, because you know what? If I see that John Deere might be ticking up into its next earnings, then it tells me that there's a lot of folks that are buying this stock because of what happened in the last 8 earnings cycles, and they're trying to buy in ahead of earnings. That's something I'm looking at here. CRM is on that list. That's Salesforce.com. There's BlackRock that's on this list as well. Lennar builds homes like crazy. They've been building homes, especially in Florida. I mean, you can't go into an area of Southeast Florida without seeing a Lennar sign somewhere, and homes for sale. And they've been killing it. And their earnings have been above their estimates last 8 quarters as well. Now, on that note, let's talk about the ones that have been absolutely crappy. The most actual earnings have been below their estimates. So we could take a look, and here we go. Some of these some of these make complete sense. When you look at Wynn Resorts, come on. If you think about the last 8 quarters, Eric, this takes us back to really pre-COVID. And so you've got 8 quarters where 7 of those quarters, Wynn Resorts has come below estimates. Well, come on. Are you really surprised? Masks on. I don't know about, you probably, Eric, you probably live near the, what's that resort that's up there upstate? I've been to it.
We got one up in Monticello where they have the casinos and everything. I've never been to it, and I live probably 25 minutes from there. But yeah, that's got to be slow right now too. It's probably picking up again now, but it's been slow for a while.
Yeah, so the Hard Rock here, Seminole Hard Rock in Tampa, and then of course the one that we like over at Fort Lauderdale, Miami area, that has that, you notice it because it has the big guitar-shaped hotel. So these guys, they did not make it. They tried, but they made it a lot harder to go in and play cards and play games where you've got other folks around you. For the longest time, the craps table wasn't even being used because, how can you be socially distant at a craps table? You're literally, it's almost like being on the floor of the New York Stock Exchange, back in the 80s, back in the 80s and 90s. And so doesn't surprise me that companies like Wynn Resorts have had their actuals fall below their estimates. But let's look at a couple other ones. Occidental Petroleum. Are you kidding me? How can an oil company miss on 6 of the last 8 earnings? But they did. Now, here's another one that's no surprise. All right. That's, oh gosh, Norwegian. All right. Took me a second. Norwegian Cruise Lines. Of course they're going to be missing. There's Las Vegas Sands. Of course they're going to be missing. But then there's some on here that you may not have thought about. Like, for instance, Netflix. Everybody thinks, now, Netflix had a really bad earnings quarter just last week. We know that. But a lot of folks looking at Netflix's stock price didn't know that in the last 8 earnings cycles, they missed on 5. They missed on 5 of them, Eric. So these are some ways we can go through and look at what we call top and bottom earnings. That's one way. Now, as a trader, what I like to do is I take this information I just showed you, and I like to go and project it on prices, on price and on volatility. So I use something called Earnings Effect Ranker. And what Earnings Effect Ranker does is it takes all that information and puts it at my fingertip. So let me just grab one of these on here and kind of share it with you. And there are a ton of them on here. Okay, Las Vegas Sands. Let's look at it. So we already talked about Las Vegas Sands, but I have the ability to look at charts, pictures, news. But this area right here is the most important, okay? Now, I showed you already that Las Vegas Sands missed on the majority of their earnings when we go back and look. This right here shows me the percentages of the stock price and what the stock was doing coming into earnings. So that 1 to 2 weeks prior to earnings, what has the stock price been doing? Dropping 3%, dropping 3%, dropping 4%, dropping 14%. And that was before the earnings announcement even came out. So if I want to look at a stock that I want to play to the downside, and I'm looking and saying, well, what makes sense here? Las Vegas Sands definitely made sense coming into its earnings, which are being announced later this week. All right. I know a lot of you are probably saying, Tom, why didn't you tell me this last week? All right. Well, I'm going to show you some coming up over the next week to 2 weeks that you might want to take a look at as well. All right. So that kind of lines up where we see certain companies going to the upside, Eric, and certain companies that are going to the downside, and how we look at this and process all this data. And then, of course, what we do with it. And I want to talk about what we do with it here when we get into our strategy session.
Yeah, you ready to jump onto the stock watch, or do you want to jump down to strategy? I'll let you
No,
choose.
let's talk about stock watch.
All
So
right.
I think the first thing we want to talk about is that, momentum trades. A lot of people think the momentum trade has seen better days, but I want you to think about momentum for a moment, that momentum can easily work as well to the downside as to the upside. So, momentum to the upside, if you think of momentum to the upside in the last year, most people think about Cathie Wood, and they think about the ARK fund. And, there was Eric, there was a piece, an article that came out about the fact that this is long-term, that when a fund manager is known so well that their face is on television and is scattered everywhere practically every day, that fund is going to underperform the next year. Well, wow. Boy, that not ring more true than with the ARK fund. So Cathie Wood, big story on Twitter this week. She moved the goalposts on the ARK fund, reporting from a year-to-date time frame to 5 years. So what that means is that she doesn't want to look at what the return has been over the last year, because the last year has not done so well. But she's bringing up a longer term. Well, look at my longer term performance. And you know what? I got to say, I'm a person that looks at long-term performance. Look at cryptocurrency. Cryptocurrency for a moment. But I don't need a 5-year performance on cryptocurrency. In cryptocurrency, we did well in 2018, despite that it was largely a bearish year, right? We did well in 2020, despite the fact that crypto dropped some 60%. in the first quarter of 2020. We did great in 2021 as a lot of the cryptocurrency markets moved to new highs. But we never had to go back and say, look at my 5-year returns in cryptocurrency. But I mean, the goalpost definitely was moved. Now, that being said, let's talk about some stocks in particular to watch out for momentum moves. So I want to show you how we look at momentum stocks. I can look at them in a couple of different ways, but I'm going to bring up something called a high-low ranker. A high-low ranker, the way we can look at this is I can look at high-low rankings for numbers of weeks. A lot of folks look at high-low rankings for the year, and I do too. I actually have this default set in my software for 52 weeks. But because the month of January has been such a tough month for the buy and hold community, I thought I would take a look at the first 4 weeks of the year and see where the winners and losers are in terms of momentum. And for that, I chose the S&P 500. You want to know what's at the top of the list? Energy, defense, energy. Can you even believe it? Las Vegas Sands is up here. All right, energy. There's Progressive, insurance. Here's Travelers, insurance. And then that's it. The top 7. And the reason I picked the top 7, Eric, is because what we look for is what has this stock done in the last 4 weeks? What has it been? What's been its high price? What's been its low price? And where is it right now in the range of high to low? So if you take a look at Halliburton for a moment, and I'm going to bring up a picture of Halliburton. Here's Halliburton. Now remember, we're not looking, even though this chart goes back to August, I'm really only looking at what has it done in January. All right, what's its high price been? Well, that's actually happening right now. What's its low price been, and where is it in the high-low range? Well, right now, Halliburton's at 100% of its high-low range for January. It means it's hitting new highs for the last 4 weeks. Let's take a look at Schlumberger. So Schlumberger, SLB, all right, it's at 91% of its high-low. So again, if I take a picture of Schlumberger, and I'm not, even though it's done very, very well since August, I'm really only looking at it from January, right? Where was it high? It's high in January. Its high was last week. Its low was at the beginning of January, and here's where it is right now. And because it's not sitting on its tippy top high, it's classified at a 91.42%. So again, the high in January, the low in January, and where is it right now in that range? And it's near the tippy top of the range. These 7 stocks, Eric, represent, out of all the S&P 500, these 7 stocks, Halliburton, Lockheed, Exxon, Las Vegas Sands, Schlumberger, Progressive, and Travelers, they represent the 7 out of 500 S&P stocks that are in the top 10% or higher of their range. What that means is that everybody else falls below, and I want to show you the momentum stocks, or the really those high-low stocks that are down today. All I've got to do is do a little quick go change-o here, and I'm going to look at stocks with the latest lowest close for the last 4 weeks. Let's pop on over, hit that search button, and there we go. All right, anything that's now at the 100% means it's really at 0. Okay, so I can look at it this way, and that might be a little bit weird for some people to say, hey, why is it at 100%, but it's 100% of its low? I'm going to flip this over for everyone, and I'm going to bring us to the bottom of the screen. Let's do that right now. Let's look at all the goose eggs, Eric. So all the goose eggs, these are all stocks that are sitting at 1 month lows right now. Cardinal Health at the bottom, Paychex. There's Apple. Apple's sitting at the bottom of its at that 4-week range. Okay. Sherwin-Williams, right? I mean, this is a company that did fantastic over the last year, over the last 2 years, and now it's pulled back somewhat. UPS has pulled back. I mean, and guys, I'm going up, and I'm still seeing zeros. So what I'm doing is I'm going to run all the way up until we see something that's higher than 0. Because I want to show you one more thing as we end out this session. There you go. McCormick on down. So, Eric, you know what this says?
What is it?
Stock number 225 all the way to 500. That tells me there are 275 stocks in the S&P 500 that are hitting new 4-week lows as of yesterday. That's even with the move up. That's with that rally at the end of the day.
I
And
like
I
how this
mean,
visually breaks it down. It makes it easy to understand and kind of digest. I'm popping on real quick because I want to remind everyone that the strategy session is coming up in just a few minutes. So that's where we're going to be able to take your symbols. We're going to be able to take your questions. So if you have any questions for Tom, pop them in the chat because I have my eyes on it and I don't want you guys to get missed. So that's my call out for you guys. And I'm going to hand it back to Tom for the next few minutes.
yeah, and you know what I want to do too, Eric? I
Yeah.
want to talk about when you put your stock. If you guys have a stock you want me to look at, I'm not going to look at it for technical analysis this time. I'm going to look at it for upcoming earnings, and we'll try to get an idea of whether or not it had some sort of a move, some sort of a pattern where it typically went up prior to earnings or down prior to earnings. Maybe we'll do it a little differently that way, Eric, so we can kind of keep everything in focus as we're looking at earnings and surge, kind of a surge session today.
This is your room, Tom. You could do it however you like, man. Everyone's going to appreciate it either way.
All right. So again, really what this tells me is that we've got. I mean, if you're a cherry picker, there's a lot of cherries that have hit the ground. There's this place that I live just outside of Sarasota, and all the orange trucks run from East Manatee County, Citrus County, to the coast, and we're starting to get a lot of those roundabouts. And those roundabouts, it takes Floridians a little bit of time to understand a roundabout, unless you came down from Jersey. If you came down from Jersey, it's so easy to navigate through some of the roundabouts in Florida because you're already used to them. But a lot of people are not used to them, especially the orange truck drivers. They come running into these things, and then they don't realize they have to stop or yield. And orange trucks, Eric, they're piling the oranges they're trying to put as many oranges on these trucks as possible, and a
You're
good bit of them fall off. I
you're
mean, if you want
legitimately
oranges,
talking about orange trucks. I didn't know you were actually talking about trucks with oranges on them, but I guess that's a
trucks with
Florida thing.
no, not orange trucks, trucks with oranges on them,
Yeah.
and the oranges fall off. And I'm telling you, we kind of laugh because we said if we really want Florida's oranges ripe for the picking, you stand out on the right hand side of some of these roundabouts, and you wait for these trucks to come through because they're always overloaded and they're always hitting those roundabouts too fast, and you'll get pummeled with oranges. You'll have more vitamin C than you know what to do with. All right, I have no idea why I brought that up, but I did anyway. Let's get into our value, our volume session for the day, and that brings me back to this chart right here. All right, so we've put 7 trades on that have come in and out of earnings so far this year. All right, and a lot more are coming too. Those of you that are Operation Surge Strike members, you definitely want to join me at 1 o'clock because we're going to get into the deep end of what this chart represents right here. But 7-0, I don't know anybody else that's out there that is running an alert service that is doing this well during this crazy volatility. Every time vol kicks up like this particular strategy does really well. That's why I want to teach it to you guys today. It all revolves around these 2 concepts, what we call the tide rolling in and the tide rolling out. So surges happen before and after a big event, and the big event that's happening right now is Q4 earnings that are happening now. So we got earnings coming out for the fourth quarter, and 1 to 2 weeks prior to those earnings, it's kind of like a roller coaster. Tick, 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 tick. What's going up? Not so much the stock price, but the implied volatility of the options. So if you're looking for a way, for those of you that buy options and you wonder why the stock moves up and your options move down, this is a way to kind of, neutralize that option time decay for a certain amount of time. There are stocks that have a pattern where the option time value actually goes up, and it happens before a big event. We try to jump on those. They're the best to buy option premium on. So we like to buy option premium coming into earnings, but get out of it right before the earnings announcement. Now, on the other side, can you make money trading off the other side of an earnings announcement? Absolutely, you can. What we look at doing there is we look at selling that high implied volatility with very, very little time to expiration, and then bang, grab it back just after the earnings announcement. So those are some things we can do. The tide rolls in, we're buying volatility. The tide rolls out, we're selling it. Let me give you an example. Here is a stock chart of Hewlett Packard. I showed this last month. I was showing this as an example. And as you can see here, you got this high surge coming in. Look what happened after the earnings came out. The surge dropped. I mean, it's just the tide rolled out very quickly. And with it, also rolled out option premium. So selling that option premium up here and then quickly buying it back afterwards results in a very good opportunity. Same thing with this earnings announcement. Notice about a week before earnings, option implied volatility started to rise. Call buyers came in, put buyers came in. A lot of different traders came in. And by the way, if I'm looking at something that if the price ticks up and the IV ticks up, I want to buy calls. I want to buy calls very quickly with the intention of selling them shortly after. If the price typically goes down before earnings and the IV goes up, I want to buy puts with the idea to sell them very quickly. All right. What if the IV goes up and you don't have an idea on price? Well, that's where a straddle comes in. A straddle is buying an at-the-money call and an at-the-money put on the same underlying instrument at the same strike price, and you're not looking for direction. You're looking for the overall straddle to move up and become more expensive. And so that can happen as well. So, but the one thing that I want to show you here is it's actually much easier to predict volatility than it is price. Because you see the volatility chart, every time we get close to earnings, it goes up, earnings come out, it comes right back down. Up, down, up, down. It's almost like I'm doing calisthenics. I've got calisthenics happening in the markets right here. Up, down. So as we're going up, if you're buying option premium on the upswing, you're taking advantage of the volatility going higher and time rushing in, people rushing in, helping push those prices up. You do not want to be in options after the earnings come out. Yeah, every once in a while you're going to do well, all right? Those who bought Netflix puts right before Netflix announced their earnings, you did well. Congratulations. That doesn't always happen, though. Okay, but you see that drop down. That drop down takes away a lot of that option premium that built up just before earnings. Now we were talking about some case studies. And last month, I talked about a case study using Stitch Fix. And what we were looking at with Stitch Fix is we were looking at, and I'm just going to bring up the actual trade. We were looking at in this case, we were looking at Stitch Fix, a company that typically went down into earnings. And then, of course, earnings came out and they went wherever they went. But I didn't really care where they went after earnings because I was a fan of buying put options 1 week prior to earnings. And I showed this last quarter. And we showed their earnings date coming out, and 7 calendar days before, we were looking at a potential trade to get into, make sure you get out before the earnings announcement came out. And we showed this example of buying a put option. Again, why did we like this trade? We were coming into earnings, and for the last 4 earnings cycles, Stitch Fix primarily went down. The price went down, and the options volatility went up into earnings, so buying puts made sense based on the pattern. So the case study that we talked about with Stitch Fix last quarter was we were spotting that rules-based opportunity. We were placing the order, okay? We entered the order as a day trade. We then, in this case, we were looking at for $3 or less. And we said, all right, based on what it did the last 4 cycles, it looked like about a 50% potential return. So $3 becomes $4.50. And that's what we were looking for, right? Or get out by December 7th, because remember, if you're doing an earnings related trade, when does the implied volatility typically at its highest? Right before the event. Okay. So what ended up happening? Here's what ended up happening. We put that thing on Tuesday, December 10th. It actually was trading for $2.80. Look what happened right before the earnings announcement. All right, 1, 2, 3, 4, 5, 6 days later, right before the earnings announcement, it hit a high of $5.25. But it was at 480. It was at 480 a couple of days before that. So there was a 53% increase, actually more than a 53% increase. That was closer to, if you look at the options going from $2.80 to go to $5.25, better than that 53% increase. But I'm showing you this pattern worked last year. Now, let's talk about some earnings setups, Eric, today, based on some volume stocks. There are a couple patterns that look very, very interesting. Two of them have earnings coming up in 7 days. AMD, I blanked this one out because it's already gone. AMD has patterns coming up in the next 7 days, and AMD is typically bullish. Now, if you take a look at AMD, it's been dropping just along with everything else. So, if you look at the stock, let's look at AMD and Exxon because they both have patterns coming up. I'm going to bring them up right now. AMD, take a look at that. And yeah, see what AMD's been doing? What everybody else has been doing. So if you're buying this one as an earnings play, you're looking for this particular stock to turn around and bounce. And again, that doesn't seem to be the trend that it's going in. So let's look at Exxon Mobil, XOM. XOM up there. What's Exxon Mobil been doing? Oh, Exxon Mobil's been doing quite the opposite. So if I were to take, Eric, a choice between AMD and Exxon Mobil, by the way, both of these over the last year have gone up into earnings. So they both offer seasonality of stock price going up and call volume, that call volatility going up. If I had a choice between the two, I'm going to have to look at Exxon Mobil because it also has a trend going higher. So I like Exxon Mobil. I like buying calls on Exxon Mobil, or not call spreads, calls on Exxon Mobil. And I'm looking at next week, all right, because the earnings come out on the 1st. I don't want this Friday's expiration date. All right, this Friday is the 28th. I want next Friday. All right, I want next Friday's expiration for Exxon Mobil. Looking at buying those, but getting out before the earnings announcement comes out. I always find people always get, when I talk about this, there's a group of people who always get the first part, but they forget the second part. They forget the part where they got to get out before expiration. And so that's what this is. This is an event-driven trading strategy. And so, once again, how have we done on these? Well, Operation Surge Strike is what I'm talking about. We've had these event-driven trading strategies. All right, we had and this is the last quarter that you see here. BTBT, $416 per contract. UAL, $345. This is where they ended. By the way, guys, here's your highest part of the trade. Here's your lowest part of the trade. So we had some that went against us a little bit, but that wasn't before the end of the trade. The end of the trade ran out profit, T2, profit, BX, profit, Uber, profit, Ford. You guys like Ford? I hear you talk about it all the time in here. We had a Ford event-driven trade, profit. And most recently, SE, we took that off for a $446 per contract profit as well. What do these all have in common? They were all event-driven trades, exactly the recipe that I just shared with you. Eric, do we have any stocks that anybody wants to take a look at, or maybe even Q&A that you've seen popping up that you want me to take a look at on, either the strategy or the stock itself?
Of course, Tom. Of course we do. I was taking note from a bunch of people in the chat. So I have a couple of stocks we could take a look at right now. Right now, Dollar wanted to see GNRC.
Okay. GNRC?
That's
Sure,
what was
that's
typed into the chat.
yeah. You know what I was thinking about? That's Generac. You know what I was thinking about? I was thinking about Green Mountain Coffee Roasters because there it is. It's on the brain. Wow, look at Generac. Okay, Generac obviously is in the what these folks do. They make generators. They make their equipment manufacturer. And boy, I mean, have they hit the skids since the last earnings report at $520 a share? You see this thing dropping down to $280. I want to look at something else on this. Let's type in GNRC over here, okay? GNRC, and I'm doing that to see if there's any pattern that's developed in the last, 4 quarters. And so I see right now, here we go. Here's Generac. So what's happened with this is that I look at what we call a median percent change. So coming into the week of earnings, you typically see about a 5% move in the stock price. 3 of the last 4 quarters, it's moved up. So, if I'm looking at this coming in, now we got earnings in 22 days. This isn't something that I want to look at buying as an earnings pick right now, because again, I'm looking at that 1 to 2 week time frame. I'd hold off about a week on it and then take another look and see, does this make sense to buy call options? But I will tell you something that I don't like about buying call options on this one. Look at how high the IV has gone on Generac. We've gone from last month, it was trading in the mid 30s. Now we're in the mid 60s. Going to cost you twice as much for those options. All right, Eric, who's next?
Yes. Next up, we have Ying Ying, who wants to see Nvidia.
Ying Ying. Okay, so this one might be NVDA. Might be one that we've got that's coming up closer to earnings. Well, no, Nvidia's, Nvidia is one of those companies. It's one of the few tech companies that runs their earnings last, all right, in the cycle. And they do have earnings coming up in 22 days. They too have been, a couple days after earnings, hit their all-time high at around 345. Since then, we've dropped off at least $100 a share. A lot of that moves happened in the month of January, as you can see. Implied volatility spiking like crazy. Does Nvidia have any kind of an earnings effect ranker? Is there something we can do with Nvidia? Let's take a look and see. NVDA, is there any pattern outside of technical analysis that tells us what's going on with Nvidia before earnings? Oof. You know what that tells me, Eric? I see a lot of minus signs after this. This tells me that Nvidia likes to fall into earnings, which means that we could see it dropping even more over the next 22 days based on what the earnings traders, based on what the surges are telling us with Nvidia. All right. Who's next?
All right, so I'm going to selfishly choose one that I saw in the chat. It's from El Conquistador. First of all, the name is great, but Riot.
I
I'm
love
looking to check out Riot.
Riot blockchain. All right. So we looked at this one yesterday. This is going to be, this is a crypto play. I can let you know that right off the bat. It is a crypto play. And therefore, a lot of times you can look at this and it's not going to help you in terms of, because what does this company do? It mines Bitcoin. All right. So if you're looking at this as a true Bitcoin play, and I'm long Bitcoin, I bought $100,000 of it last week. So I'm long Bitcoin. But if you're long Bitcoin or you like Bitcoin and you don't want to be in buying the actual cryptocurrency itself, this is a good kind of fake way to trade it, and to the upside. But is there an earnings play on it? I'm going to say no, but I'm not going to say no without looking first. So RIOT, let's do a search on Riot real quick. And again, here you go. Is this something? 16% up. Now, we saw that. I saw that on the chart. Let's go back to the chart. Look at that last week up into the earnings. I mean, yes, absolutely went 16% higher that week into earnings. Maybe even a little bit more when you count this high and not the close, because we look at close to close. But 14% the quarter before that, was down 25% the quarter before that. And then last year at this time, we had a 13% up run prior to the earnings report. I got to say, though, Eric, most of this looks like it could be Bitcoin induced and not so much because the company actually is shocking people with earnings. This one's so easy to read. If Bitcoin's up, Riot's up. If Bitcoin's down, Riot's down. But there you go. That's my earnings analysis for Riot blockchain.
Do you want to check out one more? Yeah. Oh, great.
Yeah.
Well, who do we have? I had one chosen here just because they said, please, we have to go with Chimera, and they want to see AXP. We like polite people here.
Absolutely. American Express for Chimera and American Express. So you can kind of see what happened here the week prior to earnings with AXP on that last earnings quarter. Here, it's kind of a mixed bag. I mean, if you take a look and see what happened today, because AXP is either announced or I'm looking at just the chart itself. You can see the pop up in price, right? But the rally down. Now, part of this move to the downside was induced by the overall markets. So, is there a pattern, a future pattern for AXP? We could talk about AXP two different ways. Let's first look and see if there's a future pattern that we could look at 90 days from now. So AXP, let's put it in the earnings cycler. Let's see what we got. Wow. Okay. So yeah. So earnings have come out. That's why I've seen 5 on here instead of 4. It's a mixed bag. I would not look at AXP as something that I want to buy prior to an earnings announcement. Therefore, let's look at AXP a little differently because this one's going to come up on my search on my watch list today. So back to the chart, right? We can see that AXP had a pop today, right? It gapped up. It did pull back, but now it's trading higher as of my last print and trading here around 170, 179. It's kind of a where does it go from here? And that's probably what Camara is mostly interested in is where is AXP going from here? So let me show you something. If you look at volume, let's come on down. Not a lot of volume spikes on AXP. And you know why? Because traders look at AXP as old school. It's an old school company. And therefore, a lot of the earnings in AXP are kind of baked in, so it doesn't really shock anybody. But if you look at what happened last earnings cycle, and I'm coming right into here, we're talking about that 180 to 190 range. Okay, so we had a pop on AXP. We popped last quarter. Shouldn't be any surprise, and it doesn't look like it was any surprise. We got a little pop today. But look what happened afterwards. We came back down, and we took out that low of the day of earnings. What happened after that? Momentum down. Took us right back down, filled that gap. So is it possible that that could happen again with AXP? Absolutely. Absolutely. AXP is having one of those days, Eric, where, you take a look at, for instance, you take a look at the overall market. Where's the overall market at right now? When you take a look, when those of you out there are looking at the Dow, you're looking at the NASDAQ, you're looking at the S&P 500, okay? Had a great move up off of yesterday's low, but we're back down again today. The Dow's down the least. When if I'm looking at my long-term portfolio, my buy and hold stuff, I'm actually having a decent day because I'm up today relative to what's going on in the Dow, the S&P, and most certainly the NASDAQ, which is down 2.5% today. AXP is bucking the trend because you know what? Today's earnings day for AXP. It's all about earnings. AXP could jump right back on the market train tracks tomorrow. So really for AXP, it's what is the market going to do tomorrow? If the market's down and AXP takes out that low, we could see further lows. If the market rebounds and AXP takes out that high, we could see a retest of the areas that were highs in October and November. So we're talking about that 182 to 187 area. All right, Eric? And
Yeah.
let me mention this. What I've been talking about, what does this all have in common? And I talked about this once and I talked about it before. We have a method for going in and finding these. AXP is not my best popping up and telling me, trade me, please. Okay? The trade me, please stocks were BTBT. The trade me, please stocks were UAL and T2 and Uber and Ford. These were the ones that were having patterns time after time after time telling us, guess what? We're having the same pattern that we saw 3 to 4 times in the last year. Are you interested? And I said, yes, I am. And so that's what our Operation Search Strike folks are looking at right now. And guys, we're going to dive a little deeper into this at 1 o'clock. And we're going to talk about not only our trades we have on, but I want to go into it, and Mike Wade's going to be joining me as well. We're going to go into each of these. I'm going to show you how they went from starting points, how they went from losers to winners, and what these all have in common. Tide rolling in, tide rolling out. So I hope all of you can join us. If you want to join me as part of Operation Search Strike and you're not a Search Strike member, there's a phone number there. There's a link that's on the screen that can help you join. And for those of you that are Operation Search Strike members, I'll see you in 30 minutes. Eric, thanks a lot. Have a great day, everyone. We'll see you again tomorrow, same time, same channel. We'll pick it up then. Bye now.